listening to Turning Hard Times into Good Times with your host, Jay Taylor. If you have a question or comment about today's show, Jay would love to hear from you at 1-866-472-5790. That's 1-866-472-5790. You can also send an email to questionsfortaylor@gmail.com. That's questions, the number 4, Taylor@gmail.com. Now, back to our program.
Welcome to this special edition to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm happy to have with me Quinton Henning, the President and CEO of Novo Resources. Novo has been a sponsor to Turning Hard Times into Good Times in the past, and I know that some of you have purchased shares of the company. And since the stock has, like most all gold shares these days, it's displayed some price weakness of late, I'm pleased to have Quinton with me today to discuss the company's prospects in light of a very difficult market that we've seen and have suffered through. Many of us, certainly those of us that have been on the long side of the gold share market, these are not the best of times. However, sometimes it's times like this when you can really, if you can see ahead and into the future, where you can really do well. So thank you, Quinton. I'm glad that you could join me today.
Thanks, Jay.
You know, we've talked in the past about what should be a highly economic gold mining property out there on your Beaton's Creek project in northwestern Australia. We noted that it's a free milling, oxidized mineralization. Waters ran like reefs, extending up to the surface where they are oxidized, and as you say, free milling, low milling cost, low mining cost, likely low capital cost. It all looks really quite good. You know, and you had been looking at some ways to set up a turnkey milling operation that would sort of allow you to start producing on a small scale and learn more about your project and your mineralization and all of that. But there were two recent findings that caused you to sort of reconsider your approach. Can you explain to us what those findings were and how that's altered maybe your modus operandi a little in the short run?
Sure, Jay. So first of all, I want to make it very clear that we're still pursuing this scenario, the mining scenario that we've discussed.
Okay.
The milling is what we're examining right now. So when you say turnkey mill, we were looking at, say, mid-October, a scenario where we would go to a millwright, basically a company that would produce mills and have them cost out building from the ground up a new modular mill. Now, what's changed in the past few weeks, and we put a news release out to this effect a couple of weeks ago, is that we recognize we've actually got in-house a gentleman who is a mill, or has been a mill superintendent pretty much his entire career, and he's familiar with many of the vendors around Western Australia. He's actually been calling around, and we found that there is a lot of equipment. This would be equipment compatible with the processing design that we're looking at that is available right now. So I decided to step back from, going down this path of basically commissioning a millwright to build something to, hey, let's look what's available and see if we can do this for much less cost. Mm-hmm. And the kind of things we're looking at, include the crushers, for example, crushing, grinding, and the concentrating machinery that we need. Right now, we've found, for example, just recently in the past few days, several ball mills are available in West Perth. There's a company called Interquip that has, I think, 5 or 6 of them sitting in their yard, ideally sized and suited for our project, and they're selling for a fraction of what we would have paid to build something from the ground up. So It's those kind of things we're looking at. Given the gold market right now, it is tough out there. I want to try to put this project together for as low a capital as possible. Nothing's really changed in terms of the scope of the project. We're still looking at targeting a mine that could produce on the order of, say, 35 to 40,000 ounces a year. This is a free digging scenario. We don't require drilling and blasting. We're mining near surface oxide. It's also gravity recovery in terms of processing. So all of that has stayed the same. We're simply stepping back and looking at how we can put this together as cheaply as possible.
All right. Yeah, that's what I wanted to hear, Quinton. That basically the project looks like it's pretty much the same, except in this environment you're looking for lower cost ways to get into production to start the ball rolling. But another thing that you've done recently over the last several months, you acquired I guess not far from you, the Blue Speck mine and mill. I guess it has a mill there as well.
Correct.
What's the story with that? What are your plans with that? I mean, I was so excited about what you had going with your Beaton's Creek project, and I wondered, goodness, why is he going off and buying another project at a time when he has such a great one to start with? But talk to us a little bit about Blue Speck and what your plans are with that.
Sure, and we've put out a little bit of information about Blue Speck in a news release not too long ago, so people can refer to that. But look, Blue Speck is a project. It's different geologically than what we have at Beaton's Creek. It's an orogenic vein system, but it's exceptionally high grade. I've known this project for quite a while. I've been going to this region for about 10 years now, and I've kept my eye on Blue Speck. Blue Speck is what I would consider a very high quality asset. Belonged to a company called Novo Resources. The company basically ran short of money, had hard times lately, like a lot of junior companies, and there was an opportunity to acquire Blue Speck about 3 or 4 months ago. So and for what I felt was a reasonable price. So we purchased Blue Speck. The deal encompassed $650,000 in cash and shares. We've completed that transaction. The Blue Speck project itself, as you said, it has a history. It was a mine, an active mine back in the 80s and 1990s. It's produced somewhere around 60 or 70,000 ounces at grades on the order of an ounce per ton. It's a very high grade system.
Wow.
But what's really interesting and what we really felt was important here is that it appears to have clear upside. So the existing resource, it's a JORC compliant resource. JORC is basically the Australian equivalent of the NI 43-101 in Canada. Anyway, the Blue Speck resource is on the order of 220,000 ounces at about 16 grams per ton gold. It also has antimony credits. Antimony is a metal, as many people will know. It's a base metal. It's somewhat like lead in its appearance and weight and so forth. But it's used mainly for, believe it or not, for fire suppression. Antimony oxide is used as a fire suppressant in many different applications. So I think on the order of 80% of the world's antimony goes to that. But look, what I want to emphasize about Blue Speck, I don't want to go off on tangents here. What I want to emphasize to your listeners is that we felt this was an extremely high quality asset, and that it could ultimately complement what we're doing in the Beaton's Creek area. Mm-hmm. It's very nearby. It's about 20 kilometers due east from the town of Nulligine. It's easily accessible by developed roads. It's got great infrastructure in terms of water, power, etc. So we're in a great location. We do see significant upside. We've done a fairly thorough review of the project now, taken all historic data, put it into the computer. We've also done our own rock chip sampling, and we feel very strongly that there's potential for a 1 million plus ounce system. Now, is it going to be our main focus for the immediate future? No, it's not. I want to focus like a laser on getting Beaton's Creek up and running. But it was a prime opportunity at a good time. We took advantage of it, and we can see it adding value ultimately to this project. One of the really interesting things that came out of the exercise, the same mill superintendent that we fired, I had him go out and look at the crushers on the Blue Speck mill circuit that's still out there, and it looks like we can perhaps even resurrect or refurbish the jaw crusher and cone crusher. So if you look at how much a jaw crusher and cone crusher costs, that pretty much pays for the entire deal right there. So,
wow.
Pretty benefit.
Yeah, so what sort of, the crushers, what sort of percentage of the entire CapEx would be required to get into production over at Beaton's Creek?
Yeah, let's talk about that briefly. The mill that we're looking at now, Like if we built something brand new, it would probably be on the order of we'll call it 8 to 10 million Australian.
Hmm.
But now that we're starting to look at buying some existing equipment that's in various places around the region, it looks like we might be able to put something together for considerably less, perhaps on the order of 4 to 6 million Australian,
Hmm.
and that would include refurbishing these crushers. So we're talking about significant potential capital savings. The total project, rule of thumb, look, we're not to the point where we have total capital put together, but
Sure.
total capital for a project is, one of the rules of thumb that a lot of engineers use for development is that the total capital is roughly 3 times the cost of the mill itself. If we're dealing with a mill that's on the order of 4 to 6 million, our total capital might be on the order of 3 times.
Three
that.
times 12 to 18, something like
Yeah.
that. Yeah.
Yeah. So look, we're starting to get those numbers put together. I think we're going to be as careful about putting together the project as cheaply as possible and making this go. But I think that we're going to see a project that's has very, very modest capital.
Well, in terms also of the economics, I know you can't really talk about Beaton's Creek economics. You haven't had a feasibility study or anything done, but we know that we have some sense of what the grades are. We have some sense, as you mentioned, it's no blasting and very simple mining on or near surface mining. The milling, largely gravity separation, so it's no cyanide and some of those more complicated environmental issues that arise with that. I mean, just looking at the average grades, sort of that we were looking at, Quinton, I think you were talking in terms of maybe 2 to 3 grams per ton or something like that. Wasn't that sort of what you were looking
Yes.
at?
And those would be recovered grades, yes. So
Yeah.
correct. Basically, we're looking at very low cost mining and processing, and respectable grades in terms of recovery. So, I would say it's safe to say that we should see all-in costs on the cheap end of the spectrum.
Mm-hmm.
So, yeah.
Yeah, so nothing has changed. I mean, your share price is down to an extent like everybody else's, although I must say that it seems as though there's more volatility, there's less probably liquidity in yours than some of the others, but that's partly because there's just not that many shares out there to trade, so that when somebody gets excited about this stock, it can move up very dramatically, and if there's a lack of excitement, it can drop fairly quickly, as we've seen from day to day. So any chance we might see more liquidity or more? I know you don't want to issue shares at these levels to get more liquidity, but anything going on in that area on the marketing side?
In terms of generating liquidity,
Yeah, getting
I
more.
would say, look, I would say, we've done a reasonably good job of keeping our investors informed.
Yes.
Like you said, it's a fairly tightly held company. For the most part, people are quite content with our progress and how we're moving forward. They understand, that our goals in particular and the timing of those. Say trying to get something into production by the latter part of next year. So we don't have a huge marketing campaign at present. Like we attended Minds and Money, for example, in London last week. As I would put it, it was fairly dead. Be frank. The investment shows and spending money on that type of endeavor is not necessarily all that productive at this time.
Right.
But what I find more effective is simply talking with people, and then I would encourage people who have questions to just simply ask me point blank. That way they can know, why did the stock move, 6 pennies in a day? Well, it's probably because one person somewhere got a bit, nervous or maybe excited and bought or sold,
Yeah, and sometimes people buy and sell. Sometimes people sell just because they've got debts to pay off, or personal needs or whatever. And with a stock that's so tightly held, and they're so without a lot of liquidity, why it doesn't take many. 10,000 shares can move this stock quite a bit from time, in either direction, I might add. So,
right. Yeah.
So I feel like you do, Quinton. I've been watching this story very carefully. The fundamentals have seemed always since I first met up with the story and talked with you about it, have always seemed very solid. I think it's a very exciting project, very different kind of a project with the Witwatersrand, long-term prospects, and the fact that you have the potential to get into production here near term, generate cash flows. It reminds me an awful lot of another company that's been very successful on my list called Dynacor Gold Mines. It's a different model for sure, but it's still the same way. Early on production, grow organically, internally generated growth, which is what I know you're setting out to do. And from what I can see, there's no reason to believe you won't be successful, though. There's so many things beyond your control too. And this market, it's just been one of the most difficult ones. I think you'd agree with me, one of the most difficult ones that you've seen and I've seen in my working days.
I would agree with you. Look, I went through the downturn from say 1998ish to 2001. It was a pretty tough time. Capital was scarce, similar to the state of the industry today. Every day you wake up and you see another article about commodities that just makes you want to bang your head against the wall, like Anglo American this morning, laying off, I believe it was 85,000 people. I mean,
wow.
It's astounding.
Yeah.
These are almost unprecedented times. But look, where I find comfort is looking at our project. I kind of turn my blinders in and focus on what we're doing. And I know for certain, the project we're working on is extremely high quality, can generate good return even at lower metal prices, and we have the potential, like you said, for a very, very large system here. If we can get this thing capitalized and moving forward, we should be in a very good position, regardless.
I know you're one of your largest, I think still your largest shareholder, I believe, correct me if I'm wrong, is Newmont Mining. Are there any prospects from institutions to raise some money anytime? Are there people out there that at some price might be interested in filling up your treasury, realizing how good this project is?
Yeah, you know what, Jay? I'm going to be very blunt in this discussion because, capital is a huge issue in the mining industry right now.
Sure.
We have on the order of, I believe, around 1.6 or 7 million at present in the bank. Mm-hmm. We have enough money to keep ourselves out of trouble, but we do have to move this project forward. So I am spending a lot of my time. In fact, I would say the vast majority of my time right now looking at how we're going to meet the working capital requirements to get the project fully through permitting and economic study and so forth. Mm-hmm. And then also the capital development side of this. How are we going to fund a mine? Mm-hmm. Now, we have our internal numbers. Fortunately, there are financiers out there who are very smart, who are looking at opportunities like this in this time. Mm-hmm. So I have been talking with a number of parties who can also review the same data we have, and they can make decisions based on those. So mm-hmm. in terms of financing, I am working on this almost 24/7 at this point. I want to get this project across the line. I want to get a mine built by the latter part of this coming year. And we are looking at a number of options. I'll tell you the spectrum of things that have been kind of come our way include everything from equity to forms of debt to forms of streaming and royalty. And while some of these are very unappealing, there are others that actually look rather appealing. Mm-hmm. And the way I approach it is I look at what's being offered or what people are have in mind, and I try to put some math to it and actually see how it impacts the share value of the company. And before I go down any paths, with further discussion with the group, I have to have a certain level of understanding that it does make sense. It's got to be something that's going to make sense for the company and shareholders, and also get this mine into production. So.
Well, I'm sure, one of the things that gives me comfort, Quinton, also is the fact that you are a shareholder, that you have put a lot of your own money and skin in the game, as they say, into this deal. And so I believe your interests are very much aligned with mine and other shareholders. So I want to thank you for that.
I contribute pro rata in the capital raisings we do. And, fully vested, I guess is the best way to put it.
Okay, I appreciate that. Anything else you'd like to add today before we conclude our discussion?
Well, look, there is one thing. Here in North America, particularly in the United States, we look at the gold price and we think, oh my gosh, it's what is it today, 1,074
Yeah.
thereabouts. Well, in Australia right now, the gold price is actually around 1,500, and believe it or not, it actually has been at this more or less $1,500 level for the better part of this year. Now, one of the things that I think people, especially if they want to invest in our story or know more about our story, is they got to appreciate what the mining scene in Australia looks like right now. It is absolute devastation. Does that mean anything bad for us? Well, no, because it means things are a lot cheaper, or could be a lot cheaper by the time we get our mine into production. We're seeing labor costs and materials costs and all sorts of the costs come way off. It's just like I talked about this milling equipment.
Right.
We're seeing mill components that 2 or 3 years ago would have sold for $2 million new. Now they're available for $200,000. And they're sitting there right ready right now. So we're in an ideal location. We've got a very good Australian gold price to work with. And given the nature of this system, we could actually be very, very high margin, just benefiting from that, that exchange issue, the gold price in Australian dollars versus U.S. So I'd recommend people, get going and look at the Australian gold price and see for yourself. If you're in Australia, you're in the right jurisdiction.
Well, certainly gold has come down in price, but not nearly as much as iron ore and some of those other metals that have, I guess, really wreaked havoc on the Australian economy. But so I really look forward to keeping track of this, of what you're doing there, Quinton, and I hope to have you back again sometime in the not-too-distant future to update my listeners and also my subscribers, of course. So it's really appreciated. Thank you very much for being with us once again.
Thank you, dear.